I believe every gram produced in Canada for the next 5 years will be sold. So it's who can produce the most grams. That's a quote from Chuck Raffici, one of the founders of what turned into the largest cannabis company in the world. Flash forward a few years, and just last week, Canadian investment bank 8 Capital gave Canopy a $0 price target. You heard that right, $0. The once industry leader in cannabis stocks that hit an all-time high share price of US $55 and a market cap of over $20 billion is starting to look like a zero. But what's the story? How did they become a market leader only to fizzle out? And why isn't cannabis that lucrative of an industry in Canada? Let's dive in. Let's start back in early 2013, when a small company by the name of Tweed was formed. They had the hopes and dreams of capitalizing off the back of the idea that Canada might legalize recreational cannabis. To start, Tweed acquired a 170,000 square foot facility that in a previous life was a Hershey's chocolate factory, and the lifeblood of the small town of Smith Falls, Ontario. Soon after, Tweed received its medical cannabis license, one of only 13 at the time, which allowed for the company to cultivate and sell cannabis in what would become known as the pot capital of Canada. This was just the beginning though, with the company electing to go public in April 2014 to easily access capital for further expansion. Tweed managed to raise $30 million as part of this effort, while pinning down a $90 million valuation. Despite the outward-facing success, internally there were struggles. Co-founder and CEO Chuck Raffici, whom notably was the former CFO of the Liberal Party of Canada, was kicked out from his role by August, and he was also kicked out from the board the following month, with fellow co-founder Bruce Linton replacing Raffici at the helm. The internal turmoil hinted at the pressures of operating a startup in an emerging industry. With Linton at the helm, it signaled a new phase for the company. A few short months later, the company acquired Bedrocan Canada, its biggest competitor in the market, in an all-stock deal valued at $61 million. The first of countless acquisitions which set the stage for the company to be renamed to Canopy Growth in September of 2015. Now, concurrently, political change was brewing. The Liberal Party, led by Justin Trudeau, showed strong support for the legalization of marijuana. In September 2015, Trudeau declared that the Liberals were committed to legalizing marijuana to rectify a failed system and to eliminate the criminal element associated with the drug. Following Trudeau's election, he affirmed that a Liberal government would immediately start working on a policy for the legalization and regulation of marijuana. This political backdrop set the stage for Tweed's impending success. Investors, not wanting to let other people make money, took to the Canadian public market looking for investment opportunities. And they found Tweed, who didn't waste time capitalizing on the potential market expansion due to legalization. By November of 2016, Canopy became Canada's first cannabis unicorn with a $1 billion valuation, positioning itself as having first mover advantage in a booming industry, while also focusing on a growth at any cost model that saw them acquire countless peers.
3, 2, 1.
This model proved successful. Canopy was catapulted to the pinnacle of the cannabis industry, viewed by all as the market leader amid a constant stream of new entrants hitting the market with hopes of obtaining a license to grow the devil's lettuce. The success seen by the company culminated in a landmark investment from Constellation Brands in August of 2018. Constellation invested $5 billion Canadian in Canopy, which today remains the largest investment into a cannabis company from an external entity and was meant to legitimize the company's business model. Canopy was not just idly raising funds either. It was aggressively expanding its production capabilities and making strategic acquisitions. The company expanded to a total of 5.6 million square feet of cultivation space across approximately 10 growing sites. The momentum continued, and on October 15th, 2018, Canopy reached its all-time high stock price of $73.75 Canadian, just 2 days before the legalization of cannabis in Canada. And then on October 17th, 2018, the legalization of cannabis in Canada happened. It was a watershed moment for Canopy and the industry at large. The Cannabis Act came into effect, legalizing and regulating the production, distribution, sale, import and export, and possession of cannabis for adults. Canopy was at the forefront of this new era, with the first legal cannabis sale in Canada made at one of Canopy's shops in Newfoundland.
Canopy Growth, Canada's largest pot company. He flew all the way here from Ottawa just to make that first sale.
Well, the moment was historic for the country. It signaled something much worse for Canopy.
The beginning of reality starting to sink in.
You know, at a certain point, Canopy Growth has got to be worth something because it's got that terrific backer in Constellation Brands. It's got a good CEO. There was so much damage done to it before this. I would not sell that stock here.
In the initial months following the legalization of cannabis in Canada, the country faced an unanticipated shortage of legal cannabis. At the beginning of 2019, there were projections that this shortage would last until 2022. As time went on, however, the shortage started to dry up and investor interest started to wane. In an attempt to regain the investors' imagination, Canopy announced that it would be acquiring Acreage Holdings, which at the time was a leading multi-state American cannabis operator, for $3.4 billion. The challenge to the deal, however, was that they legally couldn't own an American cannabis company while being listed on a senior exchange like the NYSE and TSX. So Canopy resorted to financial engineering to lock themselves into a series of assets they weren't legally allowed to own, and even worse, couldn't capitalize to the extent they needed to, which didn't necessarily give the market the push they had hoped for. As the year progressed, production surged in Canada. By the end of 2019, the Cannabis Council of Canada stated that there was ample supply for the recreational market. This rapid escalation from a shortage to a surplus reflected the oversaturation of the Canadian cannabis market. Canopy was particularly impacted by the fluctuations in the market. In 2019, the company reported a substantial quarterly loss of nearly $375 million. The oversaturation of the cannabis market, combined with missteps in strategy, began to take a toll on Canopy's financial performance and would set the tone for Canopy's future. CEO Bruce Linton, who had built the company under this growth at any cost model, was forced out in July.
The board had decided they wanted a different chair and a different co-CEO, so I'm out effective immediately, and there's a search to replace the transitioning co-CEO.
After a short stint in the CEO role by Mark Zekelin, David Klein, a Constellation Brands veteran, was named as the new CEO. Many believed he got into this predicament as a result of suggesting Constellation's major investment into Canopy. With the hype of legalization waning, the valuation of Canopy was hit hard. By December of that year, Constellation Brands indicated that it had no plans for further investment. The Canadian cannabis landscape was developing slower than anticipated, and Canopy was facing profitability challenges. Cost-cutting measures started to come into effect. 2 facilities were closed in March 2020, impacting 500 jobs, a figure which grew to 800 by May. When that wasn't enough, in December of that year, 5 facility closures were announced at once, along with another 220 job cuts. The impact on investors was significant for Canopy, which had a market capitalization of around $24 billion at its peak in early 2019 and saw 2020 close with the company valued at just $11 billion. And finally, the investors who were convinced that the Canadian cannabis markets were going to make them rich when these companies could finally start to sell cannabis started to wake up to the realization that expectations were set far too high. The advent of 2021 did little to bolster Canopy's position within the market. With waning investor interest and less dollars flowing into the space, Canopy continued its efforts to achieve profitability, but struggled to achieve its goals. By October 2022, the company announced plans to break up parts of its business. Its U.S. assets would be moved into Canopy USA LLC, which would hold interest in Acreage Holdings, TerraSend, Jetty, and Wana. Its Canadian assets, meanwhile, would see the sale of retail operations, which closed in January, while its Canadian cannabis operations would become a standalone business unit. This naturally resulted in the elimination of 55 more employees. This series of layoffs and restructurings were indicative of the company's struggle to stabilize its operations. Now, here we are. It's the summer of 2023, and Canopy has been making desperate efforts to right the sinking ship. In February, the company announced plans to lay off 800 workers and close some facilities, including its flagship production facility in Smith Falls, Ontario. As part of its asset-light strategy, Canopy ceased all internal production of edibles, beverages, vapes, and extracts, opting to source these products from third parties. A move that demonstrates just how strange things have gotten in the cannabis landscape in Canada when the company who spent more money on capital expenditure than anyone is now using third parties to process cannabis products. The issue didn't stop there. The company came under scrutiny for its internal controls over financial reporting. After uncovering misstatements for the accounting of its BioSteel segment, it resulted in delayed 2022 financial results and the refiling of prior financial statements. When the results were finally filed, they painted the picture of a rapidly deteriorating operation, with also disclosing an SEC investigation over the BioSteel misstatements. As of the most recent filings, Canopy has about $600 million in cash and cash equivalents and a total debt of roughly $1.2 billion. Analysts predict that by March 31st, 2024, the company's cash reserves will dwindle to under $300 million after having squandered billions of dollars in investment. Multiple analysts, meanwhile, have ascribed a $0 price target to the company, with one analyst referring to the company as being on the last puffs of the roach. The company's valuation, meanwhile, has hit terminal velocity, dropping to just $378 million. If there ever was a rise and fall story, this is it. From humble beginnings, betting on a legislative change, to a valuation of $24 billion, Canopy soared on insane optimism from naive investors and those who thought the company was going to quite literally change the world. However, when reality hit, investors couldn't get away from the sinking ship fast enough. There are countless lessons that can be taken from the Canadian cannabis boom, for which Canopy was the poster child. For many, it was their first time being exposed to the market, operating under the premise that a new industry would make them overnight millionaires. They heavily concentrated their investments in a single industry, naively refusing to listen to detractors or experienced investors, and formed cults around their favorite stock pick or executive team member. Today in Canada, 0 public operators consistently generate meaningful positive cash flow. Sure, there are a few that do a little better than break even, but it still pales in comparison to the billions and billions of dollars invested in a market that just isn't that lucrative. Perhaps the industry is overtaxed. Perhaps the illicit market is too hard to compete against. Or perhaps something called weed isn't meant to be built into a Coca-Cola style brand. The reality is that investor demand in cannabis stocks was substantially higher than the demand to smoke the actual product. And now we can only hope that there can be a rebound for cannabis stocks for those investors who stuck around. All right, everybody, thank you for watching. If you do me a big favor, please smash that like button, subscribe, ring that notification bell. Also, let me know what you think in the comment section. Do you think that cannabis can make a bit of a comeback in Canada? Is this just sort of the low point? Did you play cannabis stocks during the booms from, say, 2017 to 2021? And what were the lessons you learned? All right, everybody, thanks for watching. I love you all. So guys, we just recently launched this channel and we noticed that 99.9% of our viewers are not subscribed. So if you enjoyed this video, we need your help in growing this channel. By subscribing, that would help us keep the lights on and make sure that our crews have jobs in these uncertain times. So please hit that subscribe button, and we promise to make more quality videos that I'm sure you're going to love.